It's been a rocky first half of the trading year for markets, but the recent rally off the mid-June lows may be easing investors' anxiety. Investopedia is out with its latest sentiment survey tracking the pulse of retail investors. Editor-in-chief Caleb Silver joins us now with an exclusive look at the results. Caleb, welcome back. So consumers are worried. They're anxious.
Yeah, they're very anxious. They're still cautious, but they're warming up a little. Reminds me of the little kid walking to the end of the diving board, looking, saying, is it time to jump in? Can I do it? Can I do it? Not totally going in. A little less worried than the last round of surveys back in June, but still highly elevated when we look at the last couple of years.
So they're not buying the dip necessarily. They're sort of positioning for it. What's their top concern at this point?
Well, their top concern is inflation, just like everybody else is concerned. They're also concerned about geopolitical uncertainty. They're concerned about a recession. They're also concerned about these rising interest rates. It's that whole gumbo of uncertainty, though things are starting to clear up a little bit. And, you know, uncertainty is like kryptonite for investors, especially retail investors. When they can't see, they stay on the sidelines.
So how good of an indicator or contraindicator is this data generally?
Pretty good indicator, because these are people who are self-directed investors. They put their own money to work. Some use financial advisors, but when they come in, they're usually coming in with the rest of the wave right behind the institutions. So a pretty good indicator, but it just shows that maybe the last couple of weeks they felt a little bit better about things. We clipped this survey this morning, so this is fresh off the press, and they're still a little cautious, even though we've had a nice little rally.
Yeah, but you can really see the risk-off sentiment among these retail investors. They're buying a lot less cryptocurrency. Not too many NFTs anymore. Not too many single stocks even, which was surprising to me.
Yeah, the no-fly zone is crypto. A lot of people just staying out of it. And a lot of folks were in there. About a third of our readers were in it. Now about 27%. Stocks outside the U.S., no-fly zone for them. Individual company stocks, except for the mega caps, which are their home favorites. They love the big cap stocks. They think of those as probably value stocks, and NFTs and options off the table completely.
Yeah, it almost seems like that the mega cap tech are their money markets. It's almost like their place to park capital. But my question is, how much powder do you think there is with the retail investor? I've been amazed at the resiliency of the fund flows coming from the retail community. In fact, even through some of the worst of the times, we were actually still seeing the same fund flows that we were seeing from last year. But talk about dry powder. Talk about, you know, a group that has taken the market to all-time highs. Are they behind us now still?
Yeah, I think so. And the fact that they've sort of sat on the sidelines for the past several months means they want to get back in. These are active retail investors, long-term investors that want to participate. They're just looking to get back in when it feels a little bit safer, but they're not going to go back to those risky areas from 2021 where a lot of money was made and a lot of money was lost. These are folks that like the tried and true stocks from Apple all the way down to Ford and JP Morgan. They like the big mega caps.
So 2021, that was a peak in investor anxiety. So, I mean, investors are anxious, but it's still much, much lower than what we've seen even recently.
Absolutely. The peak was 2020, March, April of 2020. It has come way down from that. So they're not as anxious about market events. They're more concerned about the macro picture right now. But that is keeping them away from the stock market in general for at least the last few weeks.
Do you get a sense of what investors are doing outside of stock? I mean, I know that your purview is the stocks in their portfolio, but in terms of housing and other sort of, how do they approach investing in general? Do they think it's a time to just be hands-off overall?
Well, it's funny, because when the market cools off, they start looking into things like how do they get a little bit more equity out of their homes, or when's the best time to put money to work in real estate. These are active investors looking for opportunity wherever it opens, wherever they see the open door. Right now, they don't see a lot of open doors, but they're inching a little bit closer again to the end of that diving board. I think we get a little bit more confidence in the market, they'll come back in.
All right, Caleb, it's always good to see you. Thank you so much.
Thank you.
Caleb Silver, editor-in-chief of Investopedia. I don't know what the read-through is to, I mean, we were just talking about Robinhood and some of these other sort of retail brokerage names.
Well, one of the things that I've noticed with some of my clients in the wealth management world is that there is a little bit of a FOMO here. Folks that actually had a little bit of powder, and again, I'm looking at Caleb's notes here, and you know, the 30% are predicting a 10% drop still in the next 3 months. So sentiment really bad, but a lot of folks who actually were well, you know, maybe they're well advised, maybe, but they have some cash and some powder and really feel like they might be missing one of those moments. Because let's face it, those COVID lows were, you know, people use their term generational buying opportunity, I think, too much. But that was an opportunity that truly you were able to buy stocks, not even at those lows. So that's what I see from the retail investor. And we said that there wasn't a buy the dip mentality. I'm seeing some of that again.
Yeah. What are you seeing, Courtney?
You know, actually, I have to agree with that. And I've seen some of that with my own clients as well. But I actually see this as good news, right? People, when they're the most nervous, that's when you're going to get your market bottom. By the time that they wait for that clarity that they're hoping to find, at that point, the markets have already priced that in and it's gone up. So I think this is something you want to take as an investor. look at this as an opportunity because people are nervous. That's probably about the time you want to start getting in.
Jeff?
Yeah, I just don't think they're nervous enough, right? I mean, price affects mood. It's amazing how that always happens, right? And I don't think sentiment is kind of the coil it was heading into earnings season. I mentioned bull bears. You've seen bulls outnumber bears for the first time since April. You're seeing it in some of this data. So I think sort of the pressure and that anxiety easing isn't necessarily a good thing going forward. And I think it serves to take some of the momentum out of the rally that we're seeing right now. The other thing that I thought was sort of interesting is that, people are buying less risky stuff. Again, not surprising. I think that in particular continues. I keep talking about quality growth, those types of companies. I think you probably continue to see that going forward.